What's popping? All right, today we're about to talk about the shoebox theory and why you need to learn it, right? So the shoebox theory actually comes from investing, and basically you have three types of people that, put their money up, right? So you got the first motherfucker, right? You got the person that, put their money into the shoebox, right? So you got the shoebox hustler, Oh, Lord. Don't display any private information. All right, all these videos are going to be done research style, right? It's about to be the raw and nitty-gritty. I'm showing y'all exactly how we make this happen. Perfect. I love these images. All right, boom. So first thing first, you got the shoebox hustler, right? So, we got the person that's making the money, making the money, whatever the case is, and they throwing their bread into the shoebox, right? So when you put your money into the shoebox, if you don't know about inflation, I'm about to tell you now. So inflation is something to where, okay, we have the central banks, right? The Federal Reserve, they print money. If they print money, that means there's more money, which means the money you currently have is less valuable, right? This is important because if you have parents or grandparents, these be like, yeah, back in the day, I used to buy a bag of chips for 25 cents. Now a bag of chips the same size is $5. You get what I'm saying? So that's inflation at work, right? So the person that puts their money into the shoebox, right? They're hurting themselves because the same one that they're putting in the shoebox is going to be worth less and less. You get what I'm saying? So this is, the first person, right? This is the person that puts their money inside of a shoebox. All right, next we have, we have the better version is, right? So you're like, I ain't gonna put my money in the shoebox, but I need my money to, grow. So they say inflation is about 2 to 3% per year. It might really be a little bit more than that, but let's just play the 2 to 3% game, right? So now we got the HYSA, or the high yield savings account, right? So this is going to be a savings account that's paying you 3%, 4%, or 5%. Now, if they say inflation is 2 to 3% per year, then that means that if you put your, money into a 3, 4, or 5% high yield savings account, now your money is keeping up with inflation, or you're making even a little bit more money off of inflation. Now, this is how a lot of people used to, especially the wealthy, they're live off this money, right? So they have money that they live off, and then they have their investment money, and we'll get there in a second. So say, for instance, if inflation is 3% on a worst end, and we're making 5%, that means I'm making a 2% difference, right? So if let's say I have $1 million, at 5%, I'm making $50,000 a year, right? And that's passively, so I don't have to do nothing. Passively, I'm making $50,000 a year just for having $1 million in there. All right, we can up the score. If I have $10 million, that means I'm making $500,000, right? $500,000 completely for the simple fact of just let my money stay into this higher savings account. Now, inflation is eating away at about $200,000, right? And $300,000, and basically, so I'm making a profit of $200,000, quote unquote. But at the end of the day, no matter what, I'm living off that $500,000 for doing absolutely nothing. So this is way better than the shoebox hustler, because a shoebox hustler is putting their $10 million up, and then next year their $10 million just went down by $300,000. It's basically like somebody coming to your shoebox and taking $300,000 out. I don't care if you had $10 million. Would you want somebody coming into your shoebox and taking out $300,000? No. But instead, if you do that same $10 million and you put that into a high yield savings account, right? Boom, that's like somebody coming and adding $200,000 to what? Your shoebox, right? So this is the complete difference, right? But we got one more. That's like the half brain, right? The shoebox is like, I don't know nothing about money. The second part is like, all right, I learned a little something, I know a little something, but do you know everything? Now we have stock investments. Ooh, we there, right? We have stock investments. Now, on average, stock investments usually go up 8 to 10% a year, right? If you're a good investor like me, I mastered the fucking stock market. Thank God. I've mastered something in life. Bro, it feels so good. I have mastered the stock market to where I know when to buy, where to buy, and I know how to. Anyways, if you master the stock market, you will know how to get your returns, right? So on average, the stock market usually opens. It usually closes about 8 to 10% higher than what it opened in the previous year on average, right? But if you know how to start buying at certain prices, if you know the exact price of stock will drop, etc., stuff like that, then you will be able to actually get in at these certain points, and you can ride the market up and actually start learning how to beat the market. Beating the market is really easy, right? Because if you get into a stock, say it opens at this certain level and it pulls back down, everybody's like, oh my God, the market's falling apart. Oh my God, we're going bankrupt. People been saying that since the beginning of time. The stock market has been around since what, the 1800s and maybe before that. And everybody said that stock market has been hitting all-time highs ever since inception, right? So when it pulls back, you find the exact levels to start getting and buying it, right? It's beautiful. You learn how to actually track the market itself, right? You learn how to track the big money, because the big money moves the market. They're called market makers, right? The big money moves the market. So by the big money actually moving the market, what we do is we know, okay, this actual hedge fund is buying right here. This billionaire is buying right here, right? This politician is buying right here. So we know where they're buying at. We see their activity on the actual charts themselves, and then we actually get into the market. And by us doing this, we're able to beat the market, because, for instance, say the market open right here and it closed right here. If it opened right here and we bought down here, then we had a way higher return than somebody that bought when the market opened. So with all that being said, this is way better than a shoebox hustle, because even if you don't know what the hell you're doing and you just put money into the market, on average, you're going to make about 8 to 12%, 8 to 10%, whatever the case is, right? If you're making this on average, that means that person that was putting their money away, they're losing $300,000 to inflation. They got 10 million. The higher savings account person, they're getting 200,000 added to their shoebox after inflation. But the investor, the normal investor, right? Say if you're making 10%, we're gonna go to medium. That means we're making an extra 7%. So we're making an extra $700,000 after inflation, right? Total, we're making an extra $1 million. So we're making an extra $1 million, but our money is still compounded after inflation, $700,000. But if you know what you're doing, and you could take a 10% return and you could buy at the right price, and you can make 20, 30, 40%. Now we're talking about a $10 million investment that just made you $4 million in 1 year, right? So this is the thing they talk about, this is the power of investing. Everybody tries to teach you, go all in on swing trading or go all in on day trading, all this extra shit. But when you really actually learn investing and you stop being a shoebox theory person, you be strategic about when you should do high yield savings account. But when you actually put your money in the market and know when to buy, right? You have a high here, report back here, you buy here and then run it up. Oh my God, I did not mean to click that. But when you actually know how to do that, it's over with. So this is the shoebox theory in a nutshell. A nutshell is crazy. In a nutsack, you dig? But this is a shoebox theory in a nutshell. If this helped y'all, man, make sure you leave a like, comment, subscribe. If you want to learn more, man, click the link in my bio. I actually, show everything I know about the stock market and how I actually track the big money. Because that's how you make money in the market, is by tracking where the big money going. If the big money move the market, wouldn't I want to get in when and before they move the market? It's common sense. That's why everybody is so successful at this game. Anybody that is successful at this game, learn how to follow the big money, the people that actually move the markets. Know when they're buying, know what they're buying, when they're buying, etc. So if you want to check that out, man, link in the description down below. I also have free products, of how to make, money in the AI business and crypto and shit like that. So, whatever the case is. But yeah, that is shoebox theory in a nutshell. I'm going to see y'all in the next one. You eat.